Hi there folks, welcome to this week's weekly forecast. It's Monday the 26th of July. Okay, so last week, big week for the global stock markets, the US stock market, the S&P 500, the Dow, all hitting fresh new highs as cheap money looks like it's going to be around for a long time. Quite a quiet week on the Forex front last week. We did have the ECB, which is the European Central Bank, basically controlling the European interest rates and therefore the euro. They came in pretty dovish as the market was expecting. There's no sign at all of them raising rates anytime soon, and there's no sign of them even easing back on their bond buying. So the euro, rightly so, was trading from the back foot, although we are coming into some support zones now. We'll talk about that in a moment. Okay, let's have a quick look at what's going on in the currency markets. This is my momentum meter. This is basically the reason why I trade the Forex markets. I don't know how anyone can trade the Forex markets without looking at something like this. Unfortunately, it doesn't predict the future, but it does tell me exactly what is going on at the moment, what currencies are being bought and what currencies are being sold. And I'm a trend follower, so I always like to buy the currencies that are being bought and sell the currencies that are being sold. That basically gives me my edge, and this basically tells me exactly that. Remember last Monday, you had the Canadian dollar, this purple line. You couldn't give the Canadian dollar away last week. It was the weakest currency. It was certainly under a lot of pressure as oil prices were crashing and so forth. But the week saw oil prices rise. I think it was almost 9%, and consequently the loonie, the purple line, ended the week on quite a strong footing, came back towards the end of the week. See here, the Australian dollar, that's been under a little bit of pressure over the last few trading sessions. Obviously, we've got the COVID lockdowns extending out across Australia. We've also had some weaker numbers out in terms of job numbers out of Australia, all as a consequence, of course, of the pandemic. Pound was quite strong in the week, ended up quite strong, one of the stronger currencies. And here you'll see the green line, that's the greenback. That was basically showing you the dollar, which ended the week maybe a little bit weaker than where it started, but nothing too big. Although this week could be a big week for the US dollar because we have the all-important FOMC. FOMC is the Federal Open Market Committee. It's basically when they decide on interest rates. Now, again, it's unlikely that they'll be moving interest rates, but the key thing we'll be taking away from that is what they're going to do about their tapering. Now, without going into too much detail, tapering is basically easing back on their bond buying. At the moment, they are bond buying. That basically means they're putting liquidity into the markets at low levels of interest rates. If they ease back on that, that's known as tapering, and that's basically an upward pressure on interest rates, and the US dollar should follow to the upside on the back of that. So we'll be looking to see, are they going to be talking about tapering? Are they going to be talking about tapering sooner rather than later, or are they just going to push it out further? But nonetheless, we will definitely be paying attention to what the Fed say on that, and that is going to be out later on in the week on the 29th. Look at that when we come onto the calendar in a moment. Okay, so let's have a look at our picks for the week. So we are looking here at a short trade in the Aussie against the yen. Now remember, these are not trade signals. You need to go and apply your own research, your own strategy before you take trades. These are just a bias that can change in the week as well. But at the moment, from the get-go this week, we're looking at a softer Australian dollar, and the Japanese yen is taking its place as a safe haven currency. As the stock markets get to these all-time highs, you see sometimes the yen getting a little bit stronger in anticipation of maybe a correction in the stock market, and that's basically what's happening at the moment. So we're looking at a short trade against a short Aussie, and being basically buying the Japanese yen against it. Also, we're looking at a euro dollar short long trade here. Now, the euro, as I say, has been trading to the downside. The ECB was reasonably, as I say, dovish last time out. Fed maybe more hawkish. So that maybe is a counter argument to what we're seeing here at the moment. The currency pair has come into some real big, strong structural support. If you look at the daily chart. We'll show you that in a moment. The last 5 days, we've been bouncing off this support, and now it does seem to be indeed a confirmed level. So we're potentially seeing now a bit of these short covers. They've been selling the euro down over the last few weeks, maybe a bit of covering there ahead of the FOMC this week as well. So we could see a bounce in the euro against the US dollar. We're looking at maybe a level up there at 19, 1.19. But again, don't just go and trade that off the bat. That is not trading. That's more like just gambling. You need to apply, as I say, your own strategy. And I'm looking at an Aussie New Zealand short trade. Again, Aussie is underperforming the commodity currencies out of the three. New Zealand is reasonably quite strong with the RBNZ, reasonably quite hawkish about their economy. Australia, again, with the job numbers and COVID restrictions, it is under pressure. It is one of the softer currencies. So I like to sell soft currencies, sell weak currencies, and buy the stronger ones. So a short trade in Aussie New Zealand, and we're looking at the next level down there at 104.20, about 120 pips from where we are at the moment. So I'll be looking at that bias. Max is looking at a long trade in gold, which would help if certainly if the US dollar does come under pressure this week. Basically, if the Fed don't talk about tapering or basically push it out further, then dollar is going to come under pressure, and that will be good for the gold. And he's looking at gold back up to the 1820 level. Right, now let's jump on to the screens and look at the economic calendar and look at a couple of charts as well, especially that euro against the dollar. Come on. Okay, so before I jump on to the economic calendar and look at a couple of charts, I just want to talk a little bit more about this momentum meter, because I think it's quite important that you understand what's going on here. I talk about it each and every week on the introduction. I normally look at the 4-hour. But this momentum meter really is very useful on all time frames, especially if you're trading on the lower time frames. So on the 15-minute chart or the 5-minute chart, and you're maybe looking to scalp the markets. Now, I'm not a big scalper these days. I've just got too much going on in my world here. But for scalpers, this can be very, very useful. I can adjust the time period of this chart, and every time you change the different time periods, of course, the lines will look very, very different. But if, for example, you are looking to scalp the market and you have this there on the 1-hour chart, well, clearly this currency pair at the moment, the white line, that's the British pound, that has got some real big momentum to the upside. That is pushing up. If you're looking at that one pushing up and you're looking at this green one pushing down, that's the greenback. That basically means there may be some scalping opportunities in the pound against the US dollar. Certainly that's where my eyes would go to see if indeed any opportunities are there, rather than me trading something here in the middle where you've got the CAD and the euro at the moment basically hugging each other. There's not much going on in there at the moment. We're always looking for the best opportunity, the best edge, the best currency pair to trade. So trading the strong currencies against the weak currencies on the lower time frame charts can indeed be very, very advantageous for you. You can also take this down right down to the 5-minute chart as well. In fact, you can take it down to the 1-minute chart. I don't know if I would bother doing that, but you certainly see here the 5-minute chart. You can see still the pound is got some big strength at the moment. The edge there will be in pound against the dollar on a shorter time period charts. Right, that's enough about the momentum meter. Let's have a quick look now at the euro against the US dollar. Okay, so this is the euro against the US dollar, and this is a daily chart. Now, as we've indicated, this currency pair has been on a solid downtrend now, pretty much since the beginning of June, end of May. But we have come into a significant level of support in here. This support's been respected back at the end of March and back again at the end of last year. And you see here we put in 1, 2, 3, 4, maybe 5 tests now of this support zone with these daily candles. Friday's candle was a definite doji candle. A doji candle indicates a level of uncertainty. And today's candle, Monday's candle, has now taken out Friday's candle. This could be indicating now that this level of support into the FOMC this week could indeed be respected, and a move back up to this 19 zone back up here, the next level, seems to be the path of least resistance, which is why we are looking maybe for counter trend trades this week into that level. I'm a trend follower, but that doesn't mean we only follow trends. Counter trends can indeed be pretty powerful when they happen. This doji followed by this bullish momentum candle could indicate just that. Okay, so if you head over to the forexsignals.com website, scroll down to the bottom, you'll see the economic calendar. Again, this is very important that you have something like this to keep you out of trouble. Basically tells you what's coming out for the week ahead. Last thing you want to be doing is taking trades just ahead of a major announcement that you weren't expecting. You find yourself getting stopped out before you've even logged your trades. Right, so it is quite a quiet week this week. Anything that's basically deemed to be high impact news would be coloured red down here. Anything that's been deemed to be low impact news would be green, and medium would be orange. So not a lot going. I like to look out the next 7 days in advance. Basically, we've got some consumer price index coming out of Canada. That's basically on the 28th, so a couple of days from now. So we'll be keeping an eye on that. Obviously, we're always looking at consumer price indexes for the economies, because it basically gives us a clue on where prices are going, on where interest rates will be going. Of course, if prices are going up, if inflation is increasing, then it basically means the central banker has to think about moving interest rates to put a cap or to restrict the inflation. And indeed, if interest rates move, then the currency should follow. So we're always looking at the inflation data to give us clues on where the currency is going. Bank of Canada basically will be out on Wednesday. And then we've got the all-important rate decision out of the US on Wednesday night as well. This is the most important event of the week. It is FOMC. It basically tells us, are interest rates moving in the US? Now, it's unlikely that they'll be moving interest rates this time out. And you can see that here because the expected is 0.25 and the previous is 0.25. So that's basically no change. But importantly, the press conference is really important because it will give us clues to what they're thinking. I mentioned a moment ago there on the whiteboard there, on the interactive board, that the tapering is all important. Are they going to be winding back on their asset purchasing, on their stimulus? And if that is the case, if they start talking about that, then you can expect to see the US dollar push higher. My gut feel, and it's only a gut feel, I certainly wouldn't trade the back of this, is that they will talk about tapering, but just not yet. We're not ready for it at the moment because, of course, there's lots going on there. Inflation is running high there, but it's deemed to be transitory. And I think the markets maybe could possibly be slightly disappointed with the Fed on Wednesday, which is why I think the dollar may trade lower into it. But again, that's not a strategy that I would be trading. I wait to see my setups appear on the charts before I take my trades, following the strategy that I know to be proven and tested. So later on in the week, not a lot going on. As I say, we've got some GDP figures out in the US on the 29th. Some home sales and so forth. So quite a quiet week. Some stuff coming out of Japan in here as well. If you're trading the Japan session, then you need to make sure about that. We've got some producer prices index here as well. By the way, if you click on any of these, it will basically tell you exactly what the data release is and its likely impact it's going to have on the market. So that's basically a bit of education in there as well. So you've got some Australian producer prices as well for the week, and you've got some what's that? You've got some GDP figures out of Germany as well. So quite a quiet week. We've got GDP figures out of the Eurozone towards the end of the week. You've got the expected here, and of course, if the markets, if the release is widely different from what's expected, that's generally when the markets will move. But of course, there you go. So have a look at this in your own time. Maybe do some analysis and have a look and see exactly what the impact is likely to be. Bit of education in there for you right there. Of course, next week, all important non-farm payroll. Of course, we stream that live as well. So if you want to join that, you can do so. Just pop over to the forexsignals.com website. Okay, so if you found that useful, at least now you know what's coming up this week. Now, if you want to take part in our daily live streams, myself and my fellow mentors streaming live around the clock, looking for market opportunities and so forth, streaming up to 6 times a day, 5 days a week. If you want to take part in that, you can do so. And this week, I'm offering a special deal. For the first 10 that want to avail the promotion code below, I'm going to give you a 30% off any of our regular plans. And of course, they all come with a 7-day trial as well. So if you don't like it, you don't have to pay at all. So for the first 10, 30% off. We've got lots going on inside the trading room, a vibrant community, Lots of trading tools in there as well. We teach strategies in there. We've got risk management tools. And of course, you can get your hands on that momentum meter as well. See how it works for you. Certainly, if you're thinking about doing some scalping, you might find it very, very useful. If that is not your thing, that is not a problem. I will see you next week. Have a good week.